economy. I
Nilesh
think we are home.
Kotak joins us now. Nayantara, I think I'll have to interrupt you there. Just pardon my rather rude interruption. Nilesh, what Nayantara, my colleague, has learned is that there is a package which could be coming for the capital market. And the first headline bullet of that package could be that the definition of long term, which is currently at 1 year, and tax where it stands at 10%, the definition of long term could go to 3 years, which is that if you're investing in inequities, keeping them for 3 years and more, you'll have to pay no taxes.
I think Nikunj, all I can say is आपके मुंह में घी शक्कर. Clearly, this will excite investors. Increasing 1 year to 3 year is perfect for equity holding, and reducing taxation at this point of time will definitely be a welcome step for investors. It will improve their sentiment.
If one has to put two and two together, I would imagine that more than HNI investors, this is great news for the SIP investor. Because when you are investing in SIP or when you're starting a SIP, you essentially have a 3 to 5 year time frame. And now you may not have to pay taxes on your future SIP purchases or future SIP profits.
Definitely. We have to incentivize long-term investment. And for that, making such kind of change will be very positive. More importantly, this will be a message from the government that there is a respect for the market, there is respect for the feedback which people are giving, and a corrective actions will be taken, which is in the overall interest of the economy and the market. I think this will put a lot of faith to the investor sentiment.
Nilesh Shah, good afternoon. Nayantara here. This is what we are understanding, that the government realizing that look at the $4 $200 billion of MCAP eroded because of a surcharge that could have earned it maximum 400 crore rupees. But the questions that are being asked is that if you could do this, we don't know what will happen tomorrow, day after, and that's why this confidence boosting measure that may come, LTCG, the biggest ask that I think all of you investors have had, fund managers have had. But we're also being told besides LTCG, maybe some tweaks as far as tax relief on dividends go, correcting the arbitrage of almost 14% between mutual funds as well as AIFs. The big question, Nilesh, is if all of this happens, will we see a vibrant capital market? Because I think that's in the interest of everyone, whether it is consumption, the economy, and the government, whose entire fisc balancing rests so much on disinvestment.
Definitely, this will improve investor sentiment, but to deepen capital market is a journey, and like they are taking feedback from investors, from FPIs on taxation surcharge, from domestic investors on LTCG, if they sit across the table with all the players, the regulators most importantly, the market players, domestic as well as global, and then chart out that what do we need to do to deepen our markets, I think we can achieve. In terms of physical infrastructure, our market, capital markets, is at par with the best in the world. It is around this physical infrastructure we have to create an ecosystem where markets are liquid, markets are deep, and the impact cost of buying or selling is bare minimum. So this is a positive step in that direction, but you'll have to take many steps to ensure that our markets become deep.
While we, deepening of the stock markets, widening the tax base, all of this, of course, takes a long time. But Nilesh, at the same point, I want to ask you again, if the government were to just, let's say, stick to rolling back the FPI surcharge, would that be enough to bring back investors? Because what I'm being told by my sources is that the representations the Prime Minister's office and Finance Ministry's got is that's not going to cut it. Something more needs to be done. You've got American recovery. Last few days you've seen a global carnage, but with the American economy, you're suddenly once again competing with the developed world. The emerging markets are losing out as far as that goes.
I have to put in one word. When Tata Nano factory was shifting from Singur to Sanand, there was one SMS, Suswagatam, and that changed the mindset. That determined the location of Tata Nano factory. There was only one SMS, Suswagatam, ostensibly. Of course, then there were lots of follow-up action. We also have to show FPI Suswagatam. Today, we want FPIs to register in India for making investment. But can't we create list of 100, 150 or 200 FPIs where we give them license to invest? Just like James Bond has license to kill, why not we give respected institutional investors license to invest anywhere in India? When we show intent like Suswagatam, then automatically foreign capital will feel welcomed in India. They will be more than happy to invest in India. And today is a very, very good time to do that because more than 15 trillion of debt is earning negative return. There are, countries like Switzerland where up to, I think, 50 years, you have to pay money to the government for the honor of buying their bonds. So we need to ensure that there are series of steps which will make FPI capital, FII capital welcomed in India through registration process, through taxation process, through communication and treatment of their capital. Then I have no doubt in my mind that we will get more capital than we need.
Before I let you go, Nilesh, besides LTCG, which has been such a sore point, and I actually thought that all of you had learned to live with it. It was introduced in 2018, but I guess the government has no choice but to relook at all of these kind of measures given the kind of carnage that we have seen. But Nilesh, there's been a big criticism also after the budget of this year was that tax arbitrage that exists between mutual funds and alternative investment funds of almost 14%. How bad has that been? That somehow has taken a back seat when you look at maybe the FPI surcharge.
So we believe there should be level playing field among all segment of markets. Today, AIFs can legitimately say to mutual fund and say that you have some tax advantage. I can look to insurance company and say that you have some advantage. So if we want to ensure that savings get allocated on a fair level basis to various segments of capital market, the tax treatment should be the same.
Everybody wants the same tax treatment, level playing field. But having said that, nobody likes to pay tax. Tax, unfortunately, in India is considered to be a three-letter dirty word. But having said that, one particular tax surcharge made sure $2 billion of FPIs, sold out in July alone, became one of the worst markets. Look at the outflows that we saw, the government swinging into action. Nilesh Shah, thank you so much for joining us. So last Friday, we told you the Prime Minister's office was very concerned, had called for a series of meetings and was going to look at how to do away with FPIs or introduce major tweaks. Now we're understanding there could be a withdrawal of that. My colleague Ruchi Bhatia